Hello everyone, Cooper here. Bitcoin closed last night in a position that rarely happens, and I want to walk you through exactly what I'm seeing. If you are scanning the timeline or talking to retail traders today, the overwhelming feeling is pure exhaustion. People are looking at their portfolios and hitting the sell button just to make the anxiety stop. We can quantify that anxiety. This gauge represents the Fear and Greed Index. We are currently sitting at 23, placing the market in extreme fear. Earlier this month, that index plummeted to an absolute low of 8. That is total systemic capitulation. Making portfolio decisions while sentiment is violently swinging in that single-digit territory is a quick way to get wiped out. To figure out what is actually happening, we have to mute the timeline and look directly at the math. This chart tracks Bitcoin's longer-term trajectory. To understand the current panic, we have to start way up here at the top. Back in October 2025, Bitcoin reached an all-time high of exactly $126,080. Since that peak, the asset has endured a massive, grinding drawdown of 49.41%. When you watch half of an asset's peak market cap evaporate, the intense fear we just discussed makes complete mathematical sense. If we narrow our focus to just the last 30 days, the bleeding continued. Bitcoin gave up another 17.36%, punishing anyone who tried to step in and blindly buy the earlier dip. But look closely at the tail end of this chart. Over the last 7 days, that heavy downward pressure abruptly stops. The weekly price action is sitting at negative 0.28%. It has completely flatlined. And right now, the 24-hour ticker is actually flashing green. Bitcoin is holding at $63,783. Up just over 1% on the day. The historical drop is severe, but the immediate short-term data shows the selling pressure has exhausted itself. Bitcoin has carved out a solid temporary floor. The next logical question is whether Bitcoin is acting alone or if this stabilization is rippling across the wider market. We need to check where the capital is actually flowing. This split-screen visualization tracks our primary alternative indicators. On the left, Ethereum is currently trading at $1,724, showing a slight 24-hour upward momentum of 1.28%. Look closer, and the ETH to BTC ratio is firmly holding at 0.02703. When that ratio stays steady during a rough macro environment, it tells us investors are actively keeping their capital inside the altcoin ecosystem rather than cashing out entirely. To cross-check this against traditional safety nets, we look at PAXG, our gold proxy. It is essentially flat today, trading steadily at $4,147. Capital isn't fleeing to the exits in a blind panic. Instead, we are seeing controlled strategic rotation. Money is simply holding its ground across alternative digital assets and digital gold. When Bitcoin halts its slide right as Ethereum holds strong and gold remains steady, the math points to a clear conclusion. The digital asset ecosystem is finding a new equilibrium, not collapsing. Staring down a brutal 30-day red streak is incredibly taxing. Your brain is wired to perceive that persistent loss of value as an immediate, ongoing threat to your safety. That creates a very specific cognitive bias. We naturally project whatever just happened into the infinite future. If the price dropped yesterday, our brains convince us it will drop to zero tomorrow, pushing people to sell at the exact wrong moment. Take a look at this dual-axis chart. Huge red bars represent fear-driven selling volume, but notice the horizontal price line superimposed over it. When people panic but the price stops dropping, buyers have absorbed the excess supply. Weak hands capitulate, leaving a stronger market. That is how a contrarian strategy operates. You rely on the stabilizing math of the floor precisely when the timeline sentiment is screaming at you to run away. And there we are. A quick reminder that the macro picture is shifting, so please don't anchor too hard on any single level. Hit subscribe for tomorrow's update, and thank you for watching. Because the macro picture is constantly shifting, your best defense is prioritizing agility and data over anchoring to emotional fear.